Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. In late May, prices moved up to arguably the most difficult overhead congestion on my daily chart. That's between 267 to 270, where the market was capped and turned into a V-top. Prices exited out of the prior bull channel and into a new June-based, quite acute bear channel. The move lower saw the market reach the primary target at 244 and in late June, the secondary target at 233, where it also exited out of the steep bear channel. The exit was in amongst some significant supports, namely congestion at 227, the gold highlighted long moving average, currently also 227, the slowly rising mauve highlighted medium moving average, currently 235, the bright red neckline extension of the June to November 2023 head and shoulders top, currently at 236, and under the overhead congestion between 238 to 242, containing the March 2013 high at 240. Of all these, the two most important were and are the bright red neckline extension and the gold highlighted long moving average. However, I should also point out, as I said 7 weeks ago, and I quote, "An obvious area of support is further below, starting at the 50% absolute Fibonacci line at 218, and mainly centered around the old descending triangle and bullish halfway hesitation from April, between about 213 up to the 50% absolute Fibonacci line. However, I only point this as an obvious spot, not necessarily a strong support." End of quote. The market has in recent weeks hesitated, dipping, pulling back up, and initially forming a dark blue highlighted late June to date bear channel, currently at 211 to 229. For this reason, I said the following 5 weeks ago, and I quote, "V-tops, such as the one here, sometimes form a handle or sideways extension, usually a pennant or a bear flag on the way lower. Sometimes, and this is very rare, they form a flat rectangle. The issue is that a handle is a hesitation in any otherwise continuous move lower. But a rectangle, well, that is the end of that pattern, or in other words, the end of the March to day action. The next few weeks will define which course this market chooses." End of quote. Now, recently I thought the handle or extension would be some such pattern, but even more recently another pattern has emerged, starting to show up in my mind, and that is to look at the dark blue bear channel morphing into a possible descending triangle, with the base on the May 2023 low at 221. Now, the pressure in any V-top for an extension would be for lower prices, and that is what we need to look out for in the immediate future, especially on any potential significant move below the May 2023 low, and especially below the dark blue lower bear channel line, because the bear channel itself could be a form of bearish halfway hesitation. So caution, very much caution. Minneapolis wheat. My apologies for the bright red labeling on my daily chart. Sometimes my charting package throws a wobbler and does this. There is no special significance in the red labeling. So back in late February 2023, especially at the start of April last year, so that is now outside the parameters of my daily chart, the market constructed a large bear channel that morphed into what is now on my daily chart, descending and expanding wedge pattern, currently 691 to down well off the bottom of my daily chart. The upper trend line is currently escorted and reinforced, and has been for some time, though not very well recently I have to say, by the declining long moving average, currently at 685. I've kept this breached, large, original descending wedge pattern, as the others that were here, originating from August, September and October through to April 2024, that sat as just so many Russian dolls, one within another, have all been broken. Although this largest one is still there, it's because I've chosen to keep it on my daily chart, just in case. Going back to the market action, prices exited out of ultimately this short-lived late April, early June, very steep and acute bull channel by the capping action 10 weeks ago of the July 2021 low at 778. Initially it didn't look that aggressive, but this resistance stopped the rise and turned the market lower, back down within the dark blue descending wedge pattern. Well, it was dark blue, it's just a descending wedge pattern today. Back below the long moving average and down through many supports that are now resistances. The move created a June based, very narrow, very acute bear channel. The most surprising feature of this decline was how prices sliced down through the congestion formed over February to April, between roughly 635 to 676, as if it wasn't even there. The market dropped down to the October 2018 high at 611 and the April 2021 low at 606. And most importantly, the green highlighted September 2019 today uptrend, currently at 592, which held despite not directly being tested, and with a stunted horn bottom in mid-July and a fuller bottoming action last week. As below, we really don't have that much support until the December 2020 low at 542. All this ties in with what ultimately is likely to be the big picture pattern here created since February. So for about the last 5 months, you see this whole action has been an inverted diving board pattern, a pattern that I have seen duplicated in some of the other grain markets. But here in Minneapolis wheat was more advanced, as it was morphed into a V-top with an extension since late June. This extension has so far taken the shape of an expanding wedge pattern, highlighted in dark blue on my daily chart. That's currently 587 to 656. Looking at the July action specifically, I can see a possibility for this expanding wedge pattern to morph into a possible cat's ears pattern. Now, for those who are unfamiliar with this pattern, a cat's ears pattern is in essence a type of double top pattern, but it's seen after a significant decline, such as we've seen in June. So far, I have just considered it as a possibility, but as I've stated many times in the past, I've always suspected Minneapolis wheat to be a leader, showing what eventually will happen in other grain markets. I'm watching this market very carefully, as looking below, we really do not have that much support for some distance. London UK feed wheat. The extension of the neckline of the May to June 2023 reverse head and shoulders bottom is currently at 194.30. Highlighted in green on my daily chart, is an important and recurring dynamic level on my daily chart. It helped cap prices in early May, which ultimately were capped later on in May by the August 2021 high at 199.20 and the March 2013 high at 205.05. Altogether, these created a V-top pattern with a very sharp downward slope that became an inverted diving board pattern. And here's the leap of faith I'd previously asked you to make, and to do so again this week. The V-top became a V-top with a ghost extension. That is an extension that doesn't really show next to it. And that was caused with the changeover in early July. The construction of the second part of the V-top with a very late May, late June, very acute and narrow bear channel. Now this bear channel overcame all the congestions on the way down, except the one at 164.95, just above the combined lows of July 2021 and May 2023 at 164 even. This congestion, along with, I suppose, one should include the nearby congestion from March to April 2019 between 161.95 and 165.75. I'm not sure how much of a part these played here. Anyway, these congestions caused the market to exit out of the small bear channel. We then had the changeover gap, a large one between 170.40 to 196.45. And we have created since what initially and superficially looks like a potential descending triangle. I've given it a purple downtrend, currently at 192.60, just to define it on the mess of colours on my daily chart, and a potential base in the 190 even zone. It's not well developed, and as I said 2 weeks ago, and I quote, I'll be happy to change and morph this into something else should the opportunity present itself, but for now I will stick with the descending triangle idea. End of quote. The big, and it is a big leap of faith, is to imagine this potential descending triangle pattern being stuck to the end of the small bear channel, and thus we would have, as we have seen elsewhere in the other grain markets, a V-top with an extension. Only here in truth it is not. Nevertheless, there was potential for lower prices, possibly as far as the June low at 164.95. However, we have some obstacles in the way. First off, We've seen today's action move above the purple downtrend, and so I would be looking next to finesse this downtrend or maybe retire it completely. I do note how the top side has so far been capped by the green neckline again. Then when looking below, just in case, point out that the obstacles there are significant at the September 2021 low at 181.10, as well as the 50% absolute Fibonacci line at 180.5, and the more recent March to May 50% Fibonacci line at 178.25. All this is before even mentioning how all the moving averages are below. Now, just in case my suspicions are wrong, I drew 2 weeks ago some bullish pitchforks for the early March, late June action. The Andrews pitchfork is highlighted in dark blue and the Schiff is highlighted in bright red. At this time, the market has recently been utilising the overhead bright red middle time, currently at 204.05 as resistance, and more recently the dark blue middle time below, currently 190.55. Both these bullish pitchforks, I stress, are just in case scenarios. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.